Hi, good evening, and welcome to another episode of the Weekly Market Wrap. Today, of course, is July the 13th, 2025, and my name is Daniel Ang. And we have just entered a very crucial week, if you have not already realized. Now, the 90 days pause ended this past week, and of course, the US administration would have to come out with another new measures as to what happened after the 90 days pause. And we all knew that of the only country that have actually had a deal with the United States is UK. Now, the Vietnam, although they were reported to have a deal, but it only came from the United States. Now, President Trump is among the very first to actually claim that Vietnam had a trade deal with the United States, but that has not been reciprocated by the Vietnamese side. So, what we knew is that there was a framework and the Vietnamese were actually quite stunned that the base tariff that they have to pay is 20%. They were hoping to pay only something between 10 to 15%. And I think they were looking at 11%. So when President Trump announced that the base tariff for Vietnam export into the United States is 20% plus a 40% for transshipment, that came as a very rude shock. So for now, the Vietnamese side has not responded, but I think for all intent and purposes, we only have one country, which is the United Kingdom, that has a trade deal which is supposedly at 10%. So we do not know who else will be next in the line to have a trade deal. But I think the impact of the past few days has been quite nervous because some of the original tariff that was announced on Liberation Day on April the 2nd for certain countries were actually marginally higher. Okay, take for example, in Malaysia, it was originally slapped with 24% tariff. Now that tariff is at 25%. So there are countries that was actually lower, for example, like Myanmar for 48% to 40%. But 40% is a terrible rate to pay. There is no way countries that are slapped with anything above 20 over percent can survive uh, this episode here. So there will be a lot of stress. In fact, most of the country that has been announced in terms of the new tariff rates has been predominantly in Southeast Asia. And we all knew that ASEAN had a meeting in Kuala Lumpur this past few days, and even the Secretary of State for the United States actually came to visit, to attend this ASEAN meeting, hoping to speak to several foreign ministers of the ASEAN region. So it did not turn out to be very well received. So we are at the early stages of how countries are going to respond to this arbitrary and unilateral imposition of tariffs. So this week is a pivotal week, and in the weeks that follow, we are going to be expecting a lot more volatility. In fact, Wall Street actually stopped charging into new high as a result of the news of this new tariff rate this past week. So this is going to be a very interesting period, but definitely it's going to be a lot more volatile. Now, before we go to the content itself, I'd like to remind you that this presentation is not an offer to buy or sell any kind of securities, be it FX, CFD, or any kind of margin financial products. And the trading of any kind of margin products do carry the element of risk. So do understand your own risk tolerance before you attempt to trade any of these margin financial products. And I'll be sharing with you my views on the various market later on, but just do know that those are my views and has got nothing to do with the sponsor, which is IronFX, which has been sponsoring my event for the past year or so. So again, we will not be responsible for any action that you may take as a result of attending this presentation. And of course, the content of this presentation has not been vetted by any regulatory body. And if you're okay with that, let's get started. Now, in the beginning of the week, we knew that BRICS actually had a meeting, and that was in Brazil, and it did not end up very well for the United States because I think US now is threatening the entire BRICS members countries with a 10% additional tariff just because they are a member of this grouping, which the President Trump deemed to be anti-US. So that will be another, what you call that, another spanner in the spoke of this wheel. So Trump seems to be only have one weapon in which to deal with the many, many challenges that the US is facing, and his favorite go-to solution has been and will be tariff. So everything that he don't like, whether it is economically linked, is going to be slapped with tariff. So this will be an additional tariff that will be imposed specifically for BRICS nation. Okay, so this will not end very, very well because we are beginning to see there is definitely a split. Okay, even if we do get some kind of a resolution with the Liberation Day tariff, in the days ahead, we all knew that President Trump's, regardless of whether the issue is economic, will resort to imposing tariff and sanction. So this will definitely be a headwind going forward in the next few years in the remaining part of his term. He has only been serving 5 months, and the past 5 months has been anything but normal. So we can expect more of the same from him. Okay. So again, on Monday, he announced the tariff rate for 14 countries. So this is not the end of the list. We knew that over the past few days, he has been adding more countries into these new tariff rates. And we can see that top of the range is Laos. Previously was 48%, now it's at 40%. Don't think Laos will have anything to sell to the United States, and the Laos not be in a will not be in a position to buy anything from the United States. Okay, and the same goes with Myanmar, from 44% to 40%, very punitive rate. And we knew that Vietnam has a 20%. That is not included here because that was supposedly a deal. Okay, but again, from the Vietnam side, we knew that they are not happy with the unilateral announcement by President Trump that their base rate is 20% with a 40% tariff for transshipment. So the transshipment will be part of a template. Any of the ASEAN countries that has transshipments from China, I think now that loophole will be closed because it doesn't matter where China re-export to, and if any of this country want to export to US, okay, knowing that it was a these are transshipment, then they will be slapped with easily 40%. So it makes trading with the United States almost impossible going forward. So I think going forward, we will probably see less export to the United States. We are beginning to see that already. The trade deficits that the US has announced this past week itself shown that not only import into the United States has declined, the export of American goods to other countries has also declined despite the very competitive dollar rates. Okay, we all knew that the dollar has fallen more than 11%, and although it has started to rebound a little bit, but it is still double-digit loss for only 6 months of this year. So despite the weaker and more competitive US dollars, the US has not been successful in ramping up their exports. So going forward, I think the US is likely to see less country want to trade with it. Okay, if they can afford not to trade with the United States, I think there will be more regional trade among the other global south. Okay, so there is a real possibility that trade will actually bypass the United States because of the difficulties of trading with the United States due to the uncertainty surrounding the economic policies. Okay, so we can see that countries that has been slapped with this unilateral tariff also include countries like Japan and South Korea, and they are slapped with 25%. You can see that before this new rates, Japan was actually at 24%, whereas South Korea remains the same at 25%. But because of the tariff, 25% tariff on steel and aluminum, it actually would impact negatively Japan that actually relies a lot of their automobile export into the United States. So their car and car parts now going into the States will be slapped with 25%. So definitely this is a major export for countries like Japan, for example, and the Japanese has been taking a very tough line because Japan now has to go into a election on July 20th. There is going to be an election within Japan itself, and there is a very high likelihood the LDP, which is the incumbent right now, may actually be losing some seats. So they will have a lot of pressure. They cannot appear to be weak in front of these challenges of the very punitive tariff, because a lot of the support base come from the agriculture. I mean, the farmer. The farmer has a lot of sway in elections in Japan. So one of the things that the U.S. wants Japan to do is actually to import more American rice. And our rice is a very sensitive subject for the Japanese. Japanese hardly export any rice because they are very proud of the quality of their own rice. Okay, so any kind of rice that may negatively impact the farmers in Japan will likely lead to a loss of votes. So the Japanese government right now have to be very, very careful not to appear to be weak in front of all these challenges, and definitely cannot appear to have compromised the Japanese farmers. So there is going to be a lot of challenge. And for now, we knew that the Japanese official has been putting out a very brave front. They say they will not sacrifice their own interests just to strike a deal. Okay, so in the days and weeks ahead, I think it's going to be a lot of challenges. Okay, so we have to continue to monitor this. Now, Trump also on Monday said that he's going to slap the EU with 10%, but that has already been superseded by events, because the latest number of tariff, I think it was 30%, which is even worse. Okay, so we can see that the EU is not in Trump's good book. Okay, and definitely the EU represents the US, one of the US major trading partner. So definitely we are going to see a lot of grievances among all their existing trading partners, whether they are allies or whether they are perceived to be enemies of the United States. So trade is a major hiccup here. Now we want to see how the market reacts. It's very interesting later on when I show you the overall performance in the S&P 500 during the first what we call that introduction of tariff just after Trump came to power this year, and we saw market reaction was actually quite negative. All in all, we saw the S&P 500 actually lost close to 22%, okay, from top to bottom after he announced that he's going to be using tariffs. He's going to be launching tariffs against all the major trading partners. And of course, the market has rebounded after the 90 days pause. And then the market went into new high, thinking that Trump being Trump, okay, I think the market right now is coming around to the idea that Trump is going to flip again. After all, he has been doing it for the last 27 times. That's why there's a term now called taco. Trump always, we call that chicken out. Okay, so right now Trump appears to be very aggressive, but I think that is, for all we know, it could be part of his negotiation tactics, wanting countries to come back to him with better condition. Okay, so now the market is no longer believing him that all these very aggressive rates that he's mentioning is going to be the final rate. Okay, for all we know, at the end of the day, I think he'll be happy with 10% tariff. Okay, this is what we know, or this is how the market has been responding this past week, especially after this week announcement of all these new tariffs. The market did not react in the same way as it did at the beginning of the year. Okay, so Trump said there will be no extension. August the 1st, he is going to go ahead and impose all these tariffs that he's mentioned. But again, nobody now believe that August the 1st is going to be the final date. Okay, because purely from the reaction from the marketplace, we can see that players are no longer believing his words. He has called, he has been crying wolf for so many times, and so many times he has actually rolled back his various policies. So now the market is no longer believing in his threat of imposing very punitive rates. Okay, but that remains to be seen. So for for time being, August the 1st seems to be the final date in which countries that has already been imposed with, or rather have been receiving letters from the Trump administration about a new tariff, they still have time to go back to the United States and negotiate, okay? So nothing is cast in stone, okay? Even after August the 1st, it will remain to be seen whether he will go ahead and impose those tariffs that has been mentioned, okay? So this is just something that we have to be aware of. Now, not only that, he has imposed 50% tariff on copper. Now, the biggest country that is going to be affected by this new tariff on copper is actually Chile. Chile imports 190 metric tons of copper to the United States. Okay, so you can see that Chile is going to be negatively impacted, and even though the United States have their own ability to actually produce copper, to source and mine copper, but it will definitely impact everything from household electronics to heavy equipment. So the whole idea is that it's for US to actually produce and not import so much of copper. Now, copper is a major industrial matter here. So what we have seen is that copper futures traded out in New York has actually surged in prices, whereas copper prices elsewhere has not reacted that negatively. So maybe what happened is that US businesses will have to bite the bullet and eat the tariff. So to say. So this is something that also comes in. Now, the other one that I have not put up is the 200% tariff on pharmaceutical. Now, the countries that will be badly affected, of course, be China, will also be Australia, will also be the UK. Okay, so Australia right now will be hit with both the 50% tariff on copper, because Australia is also a major player in the copper trade. They will also likely to be affected by the 200% tariff on pharmaceutical. So Singapore definitely export a lot of pharmaceutical to the United States, because a lot of Americans pharmaceuticals are based in Singapore doing research. So any products that they come up with and produce in Singapore and ship back to the United States will be hit with that very punitive tariff if and when that become effect. Okay. Now, this is again between Canada and United States. Trump is not very happy with Mark Carney, which is the current Prime Minister of Canada. So he's slapping them with 35% tariff. Now, this is a lot higher than what they were talking about earlier on. So we can see that this is definitely got nothing to do with economics. It is Trump's way of telling you, I'm not happy with what you are doing. You want to impose retaliatory tariff on me, I'm going to make life difficult for you. So I think by announcing a 35% tariff on Canada, I think Trump is sending out a message that if you ever retaliate, any countries that want to retaliate will likely be faced with even higher tariffs. Okay, so I'm not sure the 35% tariff will actually be the final rate, but it's definitely currently causing a lot of pain for the Canadian. Okay, so again, we have to watch. So we also have the highlight for this past week was the FOMC minutes. There were hardly any major economic data that was released this past week. The highlight was the FOMC minutes. And we did see within the minutes itself, there was a little bit of a chaos, because most don't believe that it's time to cut interest rates, but there are a handful of the governors and what you call that, voting members of the FOMC do agree that maybe it's time to start cutting interest rates. So there is no consensus here. So what we do get is that these minutes did not impact the markets in any significant way. Okay, but it was the major highlight for this past week. Then there has been circulation of rumors. This came out from CNN. Okay, CNN has been the one talking about is the Fed chairman resigning. So we had to also factor this in. Trump has been not happy with Powell, the chairman of the Federal Reserve, from day one. Every other day, he has been telling him to cut interest rates, threatening to announce a new candidate for the next Fed chairman, which don't have or rather the power. The current chairman has his term until May next year. Okay, so to announce a candidate now, so early before the chairmanship need to be replaced, is definitely going to be very chaotic, and it definitely will cut into the authority of the current chairman, Powell. Now, Powell has been more concerned about the impact of inflation on as a result of the tariff. So he definitely does not want to cut interest rate, knowing that it will make him look really, really bad if inflation flare up at some point in time as a result of the tariff. And because of the on and off tariff uh, situation in the States, so there is no data that suggests that we are feeling the impact of the tariff. It will take months, for us to be able to, for the data to actually show up. So I think the Federal Reserve is being cautious. They want to see data, uh, concrete data to actually convince themselves that it is not having an impact on inflation. So this is definitely not going to be playing out very well with Trump, because Trump needs to refinance mountains of treasury that are coming due in September, and definitely he want lower rates, so it makes the cost of financing the mountains of debt that much easier. Okay, we all knew that he has gotten what he wanted, the one big beautiful bill, which have raised the debt ceiling by another $5 trillion. A lot of analysts say that as a result of this new one big beautiful bill, in within 10 years, the US national debt is going to balloon by at least $3.3 trillion. I think that is very conservative in my opinion. So right now, where we are right now, the official national debt in the States right now is about 36.6, okay? But other sources say it's already past $37 trillion. Okay, so we will have to continue to monitor whether this rumor is going to be just another pressuring tactic to get the chairman of the Fed to actually play ball. Okay, but I think he can't because his legacy is on the line. All right. So the other thing that came in and that affected the digital asset space, we all knew this week, Bitcoin went into fresh all-time high at 118,000 and beyond. And it was also on the same day that the XRP lab actually won a long-running battle for the last 5 years or so. The SEC has actually been suing XRP for launching a token which the SEC reckon to be a security, while the XRP does not hold a security license. That has finally been resolved, and when news broke that the court had actually ruled in favor of XRP actually surged 5%. Okay, so right now it's hovering just under $3. Okay, and we'll continue to see whether that will be the case. And the other piece of news was that BNY Mellon, which is the bank which is a major American bank, now is going to be partnering with Ripple to launch their stablecoin, which is called the RLUSD. Okay, so that actually is also received very well by market players. So right now is everything very positive for Ripple. So maybe that is something that you also want to take a look. Okay, now this is what I mean. Here I have the chart of the S&P 500 from the beginning of last year, 2024. We can see that market was actually very positive leading to the inauguration of the President Trump. That is January the 20th, okay? Then what happened was about mid-February, okay? Close to mid-February, Trump starts to sign a memorandum on the likelihood of imposing tariff on other countries. And the market did not receive this news very well, and the market started to sell off. During the initial part of mid-February all the way down to the mid-March, for example, within the 1 month, you can see that the S&P 500 fell by more than 10%. 10.5% was the exact number of in percentage loss that the S&P has actually recorded. Then there was a bit of a lull period until Liberation Day of April the 2nd, and the market tanked one more time. This time it went up by 15%. So all in all, from top to bottom, we can see that the threats of tariff, as far as investors are concerned, they were very nervous. So they did not receive this tariff news very, very positively. In fact, market lost 22% in the S&P 500 in first 4 months of this year. Within the two period, you can see that within the 2 months period, the market had lost 22%. Okay, and that turned around after the 90 days pause was announced. Now, this week here, this is where we are right now. Okay, compared to what the market has been doing after Trump actually announced the new tariff rates on Monday, the market did not sell off. The market did not go into new high, obviously, but it did not sell off in the way that we saw from the period between February to April. Okay, so that was a period where people actually still believe that Trump would do what he says. But now I think the market sentiment is that maybe Trump is using the current tariff rate as a bargaining tool to pry open foreign markets, and the market did not react at all. So this is something very, very interesting to note, okay? Because the same thing that was announced caused a 22% loss in US equity markets. Investors actually sell off, but this time around they did not. Okay, so maybe there is something else that is in play right now. Maybe at some point in time, the market do not believe that Trump is going to actually stick to all this massive tariff that he has already announced this past week. So this is a shift in a bit of a sentiment. When we talk about sentiment here, we also want to talk a little bit about market psychology. So as a trader, we are all human. We all have the emotion within us. Okay, we have fear, we have greed, we have jubilation when we are right, and we have all kind of complicated emotions. So it's very difficult for a retail investor to actually control our emotion unless you are using a trading program that doesn't require you to actually have any input. Okay, but that is what makes us human. We are not the same as algorithmic trading program whereby it's totally emotionless. That is good and bad, okay? But at the end of the day, how does individual traders actually handle their emotions? I find that having a routine helps a lot, okay? Now, if you have a way of trading, then stick to the way of trading, because there is no one system that can produce superior profit every single week, every single month. Okay, so there is no 100% what you call it a perfect system. So you got to make do with whatever you have. Trust your system, knowing that it will not necessarily produce the result that you want all the time. But if you can see that over time it can produce a fairly good result, then stick with it. Okay, so having a routine and believing in your the way you trade is very, very important. It may not be perfect, okay, but it is your way of trading. So always lean back on your belief that the system will deliver over time. Okay, the worst that you can do is actually to second guess your trading system. Okay, and try not to change the trading system, and then because no matter how you change, okay, the result will not be satisfactory. Okay, so just be aware that there is no perfect tool in the marketplace. Okay, so this is the Nasdaq. Now, same thing, the Nasdaq has lost even more ground during the same period where the S&P 500 lost 22% from the high to the low. Okay, but here we can see that the rebound has been a lot sharper in the Nasdaq 100, aided by quite a bit by the fact that NVIDIA right now is a $4 trillion company. So the Magnificent Sevens, other than Tesla, has been doing exceptionally well. Okay, so we can see that the reaction this past week has not been negative. Okay, the market has dipped a little bit, but it is definitely not a major reaction to the downside. So here going forward, if bad news cannot cause market to come down, be sure to know that if there's a slight positive news, the market will take it even higher. Okay, so right now the sentiment in the marketplace is that they are blind to negative news. Okay, unless it is so catastrophic that they will have to sit up and take notice. Other than that, they have seen this movie many times. Okay, after all, Trump has is known to go back on his policy every now and then. Okay, so the market is not taking him seriously right now. Okay, so again, the current sentiments does support higher equity prices, at least in the immediate futures, knowing that the tariff has not negatively impacted investors' appetite for risk. Okay. Now the Dow Jones is not challenging the all-time high in a very serious manner. We can see that the high traded was actually at the beginning of this month itself. 44,885 is close to the all-time high which we saw in December last year. Okay, but it is not breaking new all-time high like the Dow Jones, like the S&P 500 and the Nasdaq 100. So here, I don't think the Dow Jones is a leading indicator here. In fact, from what we can see here is that international money managers are definitely a lot more circumspect than retail investors. So this is the 10-year treasury yield. You can see that treasury yield has been climbing again, okay? And ironically, the news is the tariff, okay? So we can see the yield has been climbing one more time after coming off to below close to 4.2%. Now it's bouncing back up to 4.4%. So will this continue to edge higher? I think there's a very real possibility in the years ahead. We can see yield in US Treasury definitely going a lot higher. Okay, and this is the reality. The demand for US Treasury has actually cradled. So they will have to find new source of demand for their treasuries. We all knew that by September they have to renew $9.3 treasuries, so they need buyers. Right now, there's not enough buyer, and it's not just the U.S. From Japan to UK to the ECB, it is universal. All countries are so heavily indebted that the demands for government bonds has actually disappeared. Okay, so every country right now is having problem with finding buyers for their treasuries. And if there's going to be any risk on this front here, it may come from outside of America. Right now, the BOJ is in a place whereby they are having to find a way forward. Not only the economy has actually slowed down, we can see inflation is surging. And then on top of that, we have this trade war of 25% slapped by President Trump. It's going to make the Japanese official having to decide on which policy to go with that more difficult. Okay. Moreover, we can see that the yields in the JGB has also been climbing above 4%, very much like what we are seeing in the 10 years US Treasury. The same thing is happening in the UK. This past week, we knew that the UK budget may not be able to breach, and the 10 years gilt, which is the equivalent of 10 years treasury bonds, is also the yield on that is also climbing, and there has been not enough buyer of the gilt. And problem here is the life insurers. Life insurers has bought into a lot of government bonds, and regardless of which country, we can see that life insurers and pension funds are all dying, okay, because the yields are climbing, the asset price has been falling. So this is at some point in time, it's going to cause a major sovereign debt crisis, which is just simmering just below the surface. Here we have spot gold. Okay, spot gold is inching higher. We have a week whereby the dollar has gone up and gold has also gone up. So that's quite interesting play here. So we can see that gold is still very much elevated. There is the risk of a breakout into all-time high in the near future, possibly by August. Okay, right now we are already in the middle of July, and I have a view that is about to get explosive. Okay, so later on when we go into the chart for spot gold, I will show you my views and why I think it is perhaps the last call, okay, to actually get in on the market before the market has an explosive move to the upside. Now, crude oil has inched higher, okay, but it is not much higher. It's $68.75. It has not recovered. It has only recovered less than 40% of its steep drop from $76.14 in the day after US bombed Iran's nuclear facilities. So it is very tentative. we cannot say that it has already bottomed out. There's still a risk that we may see lower prices in the days ahead. But by and large, I am very bullish on crude oil because seeing what I'm seeing across the political space here, we can see that at some point the war that has somewhat subside in the Middle East and in Ukraine may actually flare up in a big way. Okay, so that will definitely be beneficial to crude oil prices. Okay, and if that's the case, we can be sure that inflation will be here to stay. The dollar index has also climbed up a little bit. The bottom was at 96 in the dollar index, and this is a 13-year low. So we can see that the dollar has actually sold off 11% from the top of the year to the bottom, all within 6 months. Okay, so this is a major drop in the dollar. We have not seen a dollar drop at this rate for 6 months in a row for a very long time. So this is possibly one of the very few occasions in which the dollar has been persistently been sold off. And that has got to do with foreign investors having lost their appetite in US assets. Okay, so this is just a reflection of what we already can see. Okay. Now keep your question coming if you have any, because I will be taking questions as and when you have. Now, Anonymous here is asking if the sovereign debt issues relating to UK insurance pension funds that I mentioned just now really pan out. In my opinion, what shall we position ourselves as investors? One thing you want to do is get out of government bonds, okay? Doesn't matter which country. Government bonds is not where you want to be. In fact, I've been talking about that for quite a number of years already. Okay, so we can see that if that is the case, then if yield is going to go higher, interest rate is going to be very difficult for interest rate to come down. Okay, so if that's the case, not only will we lead to major losses in pension funds and life insurance, for our own self, for example, I'm sure you are aware in Singapore, we have this thing called CPF. In Malaysia, we have this thing called EPF. These are pension funds managed by at the national levels, and it's not looking good, honestly. And you definitely want to make sure that contribution into such nationally run pension funds, you have to provide more for yourself. Okay, don't rely on that pension fund because benefits are likely to be cut because we all are, whichever country that we are going into, we're definitely having a demographic situation in which every country, once they get into the middle income group, now all seems to be less wanting smaller family units. Okay, meaning to say that the replacement rate will not be there. Okay, countries like Taiwan, countries like Japan, countries like South Korea and Singapore, for example, we can see that our replacement rate is way below replacement rate. Okay, and that means that there will be less people contributing to the fund, okay, to the pension fund, so that the baby boomers like myself can actually draw on those benefits. But then we are also seeing another phenomenon in which retirement age has been gradually been raised even higher. Now it seems to be 65 seems to be the unofficial retirement age in which we can actually draw on those benefits. So the net effect is that as investors, we have to understand that you have to build more cash reserve. You have to provide for your own retirement if you are at an age whereby you are thinking of retirement. Going forward, we have to be aware that the shift away from government bonds will result in money having to go somewhere. Okay, so right now we can see that despite the poor fundamentals that we are facing, we have war ongoing both in the Middle East and in Europe itself, and Asia is not exactly a very peaceful place. Okay, we can see that going forward, there will be a lot of friction in the economic space. Now we have US trying to reconcile and trying to hold on to their hegemony, knowing that they are slipping their days of being the biggest dog, okay, is no longer assured. So there's going to be a lot of trade friction here, and we can see that President Trump himself has put himself as the one that's going to be saving America with his very unpopular economic policies. Going forward, definitely we're going to see a lot more volatility. So whether it is good to be invested in equity markets, I think for a time being, yes. I think the momentum suggests that the only place right now uh, uh, is in equity markets. Okay, now the one big beautiful bill is going to cause a lot of liquidity flowing into markets, because within the one big beautiful bill that has just become law, there is that tax reduction for the oligarch. Okay, and we also see that there has been spontaneous reciprocal cut in benefits from Medicare, Medicaid. Okay, so definitely we all have to take care of ourselves. Now, of course, we are not living in the States, but we can see where the direction governments are going. They are struggling to balance their budget, and they will try to raise money wherever they can, and we will be the one paying the higher taxes. Okay, whether it is going to be GST or whether it's going to be sales tax, definitely we are going to be slapped with higher tax rate going forward. So it's going to be very, very difficult. So the way I say that you have to continue to stay actively invested. Okay, it may not necessarily be equity markets, but definitely you want to keep your eyes open for other opportunities. Okay, now digital assets is going to be one major piece of this jigsaw puzzle. So you have to open to the idea that perhaps the growth area could be in the digital space as well. Now, Sam is asking, why is copper price direction of COMEX and LME opposite? Uh, it only affects copper export into the United States. It does not apply to everywhere else. So this 50% tariff on copper is very specifically designed to stop the manufacturers from importing copper. So they have to source copper from within America. I think that's the idea, because America also have a sizable amount of copper in which they can mine and produce. Okay, so I think this very punitive tariff is only focused on the United States. Elsewhere, if you are not selling a lot to the United States, the rest of the world still need copper, by the way. Okay, so if Chile are not able to export to America because of the ridiculous tariff imposed on copper, now Chile is a major producer. A lot of other nations would love to buy from Chile. So Chile will not be left with no buyer. There will still be demand for copper. Okay, so it is very specifically designed to stop copper prices, the import of copper into the United States. Right, Bitcoin, this is what we are talking about. The new high traded was at 118,760. Last I checked, it has lost about maybe $800 from the high, but you can see that this is an all-time high. And this come about after what? After the tariff has been imposed. And it's also the way in which the one big beautiful bill has been approved. So, like I said, the flood of liquidity coming into markets has actually pivoted in favor of risky assets. Okay, so the fact that Bitcoin has managed to actually break out, okay, of its consolidation range into all-time high this past week is a reflection of new liquidity coming into the market, perhaps as a result of the one big beautiful bills. Okay. Now, the data that we're going to be expecting in the coming days itself will be the CPI. We're going to be very focused on inflation. We have the CPI numbers coming out on Tuesday. They do expect inflation to inch up a little bit, okay, but we want to see how much. Then on the following day, on Wednesday, we are also expecting the PPI numbers. Sorry, this is supposed to be PPI numbers, okay, will be the core PPI numbers. No estimates here, but if that's likely to be the case, if we see an uptick in the PPI, it is also to be expected. Then the other big number will be retail sales. They expect retail sales to actually come off. Okay, so again, we want to see how this is going to be panning up. No growth in the retail sales, which is a reflection of the lack of confidence among US consumers. So this coming week, these will be the three big numbers to watch out. And of course, we have one last one, which is the Michigan Consumer Sentiment Index. Okay, we can see the index sentiment has actually picked up a little bit of late since May, but I can see that the other conference board sentiment index is actually going down. Okay, so Michigan Consumer Sentiment Index is just one of the index that we can use to gauge U.S. consumer confidence. But I think if you want to look at the true nature of U.S. consumers, we will have to look at the retail sales. If the retail sales result in no growth, then that is very difficult to reconcile with the elevated, the rebound in consumer confidence as measured by the Michigan Consumer Sentiment Index. Okay. Right, I'm going to now move towards the chart itself. But before that, let me see if there's any new question. No. Okay, let me add in my chart here. Okay, I hope you can see my chart here. I'm going to start with usual with the, let me reduce myself. Now you can see that this is the Dow Jones. Okay, Dow Jones has been climbing, okay, but it is very cautious, and when it comes to challenging the all-time high, in the CFD contract itself, as shown by the IronFX, uh, by this platform here, you can see that the high here is 45,000, and the market did not try to aggressively attack it. So on the weekly time frame, you can see this is also where we are right now. Okay, market is testing but not aggressive in taking it up. So there is no change in the outlook for the Dow Jones. In fact, if we have to use the weekly time frame to actually gauge, I think the market has hit a temporary high. Now you can see that the structure in the Dow Jones is very different, not quite similar as the one that we saw in the S&P 500 and the Nasdaq 100. Here, if I want to put a equality move, immediate top side is going to be somewhere around the 47,200. Okay, so this will be the equality move. From there onwards, there is the danger, even the market break out into a new high, there is the danger that it may not extend higher beyond, very much beyond 47,400. Okay, so use this as a gauge. In fact, I don't think I want to get involved in the Dow Jones right now, because if I'm going to be bullish on equity markets, definitely this will not be the market of my choice, because it is still having that counter trend still very much in place. I think if I'm going to be maintaining a somewhat bullish outlook, I think I will put my money in the S&P 500. Here is the S&P 500. This is the longer term outlook. Okay, you can see that market has gone into new high. And if you are looking at this from the daily time frame, I think it's very interesting. Wait, hang on. I think I want to show you this platform. I want to show you another platform. Yeah, I want to show you this platform instead. So this is IronFX platform. So you can see that from the daily time frame, this is the S&P 500, by the way. So you can see that the market is moving into, a very confined range. As the market move into the apex of this structure here, upside is actually quite limited, honestly, because right now, we looks like we may have a five-wave rally here, okay? Or at least the making of a possible five-wave rally. We have one, two, and this is the most aggressive part. This is possibly part of the three, okay? And if this is part of three, it has already hit its target at 6,213. All I want to see is the market move into this bracket of prices between 6,213 to 6,475. And where we are right now at a high this past week has been at 6,000, almost 300. Very much in the bracket already. So going forward, to buy at the current price is definitely not very wise move. Okay, I think the market may come into a bit of a correction, but I don't expect a very deep fall. Okay, so if that is the case, then I think there's a possibility that in the 4 hours time we have a little bit of a counter trend in place. So immediately, if the price continues to dip below what we saw this past week, anywhere between 6,002 to 6,213 could be one immediate level. And if this is the all that it can retrace to, then the market is very, very bullish. But ideally, I want to see prices coming down to retest the edge of this green line here, this green box here, which is about 6,000. Okay, so if the price can come anywhere near the 6,000 range, it is still a good buy. Okay, in my opinion. So I am currently not looking to buy at current price, even if there's a dip to 6,002. Okay, I want to see a much deeper pullback. We may be able to get that deep pullback, assuming that Trump is going to maintain his hard, yeah, with his very aggressive tariff going forward. I think the big move is actually going to come possibly in August. Okay, so here we have market may have a temporary high here. Okay, as far as we can see. So there is no inkling that the market is going to topple down. But take this is a daily time frame. If the market ever break this lower end of this structure here, in this red line here, if we have a close below here, then that will be the first inkling that we could see a more robust corrective pullback. Okay, and this is this line. Okay, this is a very long-term support. Okay, if the market close below and close below here, that will be the first clue that we could be seeing a more sustained pullback without having to compromise on the overall bullish outlook. Okay, so this is the edge of the box here, which I'm talking about. Okay, you can see that this is the edge here that actually will act as a natural support. So if there's going to be a pullback, I will only start to look for buying possibilities if and when the market can pull back to the edge of this green color box here, which also correspond with this one. Okay, 6,000. So look out for a possible pullback. If there is going to be one, I think that will be where we want to consider. Okay. Now in the Nasdaq 100 is the same thing. In the Nasdaq, when we look in a daily time frame, we also see a potential 5 ways pattern here. We have 1, 2, and this is part of the 3, right? And the 3 right now is green target. All I need to see is the price move into this bracket, 22,300 to 23,400. Right now, the high here is 22,935. So it's definitely inside the target already. So I want to see if the market will pull back in a 4-way direction, again, to touch the edge of this green color box, 21,500. Because I do believe we have not seen the ultimate high. If we do get a pullback, especially in the 3-way pattern, and it can hold at 21,500, there is the possibility of another last burst to the upside. And in the last burst, if we see a 5-way structure completing this last wave here, then that will be closer to the top. And that is also one of the reasons why I think a top may come in perhaps in August, as early as August. So going forward, if there's going to be a pullback, well and good. If the market continues to edge higher, I currently assume that top of this third wave is at 22,935. But it could still go higher before it lose momentum, right? So we are definitely at the tail end of this multi-decade bull market. Okay, so we want to consider the possibility that the market is finally running out of steam at some point in time. Okay, so this is the 4 hours time frame. The market right now has a pullback, a counter trend. The most shallow pullback I can expect is somewhere between 22,500 to 22,600. Okay, so this will be a 3-wave, and that could be one pattern. Okay, definitely I do not want to be selling right now. Okay, so do not sell this very, very aggressive bull market, because technically speaking, there is no sign the market is topping out. But I am looking at the possibility of a top, sometime this year. Right, this is the Nasdaq. Let's take a look at the Dow. Like I said, the Dow is not where I want to be. Okay, this is the weekly time frame. The Dow is currently here, and the daily time frame also suggests that the top side is also quite limited. Even if we do get a break of the all-time high at 45,153. Anywhere here between 45,000 to 46,700 is going to be somewhere in between, where I think a top may actually be in place. So top side is getting quite limited already. Okay. Now let's take a look at the FTSE. Now FTSE has a brand new high this past week. You can see this is an all-time high. This is the bracket that I actually drawn previously. So top side, okay, all I can do right now is to draw the support line. Okay, there's no other way I can tell you where the bottom is. So long as prices stays above this low here at 7,531, I think the momentum is still favoring the upside, even though the fundamentals are poor. Immediate target is about 9,570 thereabout. Okay, so this is the weekly time frame for the FTSE 100. Okay, you can't sell this thing. Okay, this thing is still very, very bullish. So momentum wise, I think it still may have residual momentum to go higher, 9,500 thereabout. And what about the German markets? Now, on the weekly basis, the German market also have a brand new high. You can see the all-time high now is 24,640. Okay, with the immediate target at 27,500. Also very bullish looking. Okay, I won't be that bullish in Germany honestly, because based on what I can see, Germany could be a bit of a problem going forward. Okay, if Germany fails, the rest of Eurozone will go. Okay, so there is the danger because the uh, the debts are piling up. Okay, and if yields, if they cannot find buyers for the various bonds, it's definitely going to be a problem going forward. And with an ongoing war in Europe, and it does look like NATO is going to get more entwined in the Ukraine war, that will mean more expenses and more resources is going to be diverted into war efforts rather than economic activity. Okay, so that will not show up. That will not necessarily be ideal for equity markets. But that may not be the same case with digital assets. If there is going to be problem in legacy risky assets such as equity. Investors do not want to be in bonds. They do not want to be in equity. You have to think uh, where are they going to next put their money. Okay, so I think with all that's ongoing in the US regarding the Genius Act and stablecoin, I think there is the possibility more of the funds will actually be diverted into digital assets. So again, as investors, as traders, we want to be aware where the money may flow next to. Okay, so while the German index is at all-time high, I am not definitely a fan. Okay, I'm not a fan of the equity markets at this moment in time. Nikkei. Now, Nikkei has their own set of problems. You can see Nikkei, once again, is struggling at 40,000. Okay, although it has made progress, previous market has attempt to stay above 40,000. It did not, except for the Nikkei 2 weeks ago. Okay, but that has now come off again. So now the Nikkei is now back below 40,000. Okay, so if we do have a pullback on Wall Street, I do expect the same thing to follow through in the Nikkei 225. If that's the case, I think a revisit of this low here is at the bare minimum a possibility. Okay, yeah, let me see. Okay, if that's going to be the case, a good area will be this cluster of prices here. Okay, so here we have a swing low. So the possibility of lower prices in the Nikkei, it is not necessary, not possible. It is definitely in the realm of possibility. So if that's the case, the area in which we can find demand will be in this area. Okay, 25818 to 28688. So this area is possibly where, if there's going to be a deep pullback, this area, which is 100% of the pullback from the high here at 42,519, is going to rest between this area here, which also corresponds with this area of demand for the Nikkei previously. So this will be a good area to if you are going to maintain a bullish outlook for equity market, this could be one area to look out for. Okay. Now, the Japanese market will now be very interesting to watch. In my opinion, there is going to be a lot more mileage in the Japanese market purely because there are so many things going against Japan right now. We have a tariff war, which they cannot appear to lose. A 25% tariff is going to kill off their export. Okay, so the Japanese will definitely have to find a way to work with Trump, whereby they can still export to the United States. Okay, and definitely they also have to look at their exchange rate. The U.S. Treasury wants the Japanese to hike interest rates to make the yen stronger, which the Japanese has been resisting. Okay, so because if the yen gets stronger, it's going to cause collateral damage. Remember back in 2022, we had, no, last year we have that scare in the yen carry trade. So that's a result of stronger yen. So if the yen gets stronger, the global yen carry trade is at risk of unwinding. Nobody knows exactly what is the total value of the yen carry trade because it has been ongoing for decades. Okay, it's just one sure way to make money. You borrow in Japanese yen and take the money and reinvest it somewhere else. So that has been a foolproof way to make money for a lot of hedge fund managers. Okay, but if the yen gets stronger, all these loans that they have taken up in Japanese yen would have to be unwind. Okay, and that means they have to sell off everything elsewhere. Okay, and it will be catastrophic if that is going to cause a massive unwinding of the yen carry trade. Okay, so that means, as far as concerned, the Nikkei 225 looks like a more better trade proposition for me on the short side. Okay, just something to think about. Okay, so on the daily time frame here, we can see that there is currently a counter trend. Okay, we have a bridge of structure here, but there's no follow through. Now market's coming down. So at a bare minimum, if this is going to be the case, then a three-way pullback may result in lower Nikkei prices, for example. Again, a three-way pullback may result in a move like this. Oh boy. Okay, if that's the case, there's the possibility of a move towards the 38,000. Okay, and there's another swing low here. So for a market to go down this way, it is not impossible. Nearby support, if we can call this support at all, is around here. 625, 38,625. Okay, it's not over here. So anywhere between 38 to 38,625 is going to be an area of demand. Okay, and it's also an equality move. So nearby, this is how I look at the Nikkei 225. It has the more possibility of further losses because of all the headwind. Now, if the July 20th election in Japan result in more seats being lost by the LDP, which is the current ruling party, then it will definitely be a negative move in the Nikkei. Okay, so there's going to be a lot more headwinds for the Nikkei 225. So this is the Hang Seng. Hang Seng currently has been struggling, not able to break much above. So we can see that the top of the range here has been somewhere around 24,500 in the Nikkei 225 in the Hang Seng Index. So Hang Seng Index is just in that phase whereby it is not impulsive. It's still very corrective looking to me. Okay, so unless the market can take up 26,770, that will be a different story. Until this level is taken out, there is a possibility that this bounce that we see from August 2022 is probably just a correction. Okay, so until I see something different and I need this level to be taken out, 26,770 to be taken out before I change my mind to a more bullish outlook. So is there any trading opportunity this week? Unfortunately, we can see on the daily time frame on Friday, we have this big, ugly reversal pattern here at 24,515.5. Okay, so this could result in lower prices in the coming days, perhaps by tomorrow. So not particularly bullish. Okay, Let me see if you have any question for me. Looks like there's no new question. I will continue. Now I'll move into the dollar. Now the dollar, as we have seen, has actually bounced off a little bit, but I don't have the dollar index on this platform here for IronFX. So I'm going to rely on the euro dollar. Now euro dollar high is 118.30. Okay, it is almost near the target. My target has always been calling for this as ABC move, targeting 119. So the highest trade was 118.30, just a little bit off. Okay, it's possible that it may actually go up again, but again, we are at a point in time whereby it no longer makes sense to be buying the euro dollar. The three-wave rally in the major currency pairs against the dollar is also reflected in the dollar index having the three-wave pullback. So it's a mirror image of the euro versus the dollar. So if that's the case, we are definitely near a critical point. Okay, if the market want to continue in the same current direction from 101.77, okay, upside is going to be so limited. Okay, in fact, I'm beginning to look at the possibility of a near-term top. Okay, although I know 119 is still my target, there's a possibility of a drop shot. Okay, so this is the daily time frame. I want to take away this arrow. I'll show you where we are. So this is 1, 2, 3, 4, 5 of a larger ABC. So the incentive to call a top, okay, is actually quite strong. Okay, so near term, what I can do is perhaps draw something like this. Okay, unless the market breaks and close above here, maybe gunning for 119, and the market continue. If I do see a very sharp drop from here, then that confirms that the nearby top top is already in place at 118.30. So near term, I'll be looking at this resistance line for clue. If the market did punch above, close above, then there's a possibility of another run towards 119. Okay, then I want to see what happened at 119. Do we get a rejection in a very obvious manner? If it does, then that will be the top. Okay, so this is my current view of the dollar. I think the dollar may have hit a very important bottom, or is very near important bottom, and is getting ready to resume its longer term up run for the dollar. Okay, sterling, same wise. This is the daily time frame. You can see that sterling has hit a top at 138, or just below 138. Here, the structure looks very, very different from what we saw in the euro versus dollar. Okay, not so clear cut in an ABC move. Here, the structure is a bit different, but here we can see that prices has been struggling, and a lot has to do with the budget, and a lot had to do with the UK gilt. Okay, there's a possibility that the current chancellor of the exchequer may lose her job. Okay, I think her name is Rachel something. Okay, and if she lose her job, and we also saw that this past week, GDP in the UK actually slipped. Okay, so that is also adding on to the pressure. And if the UK is struggling, it will definitely also be negatively impacting the currency, which is the sterling. Okay, so near term, I think we can expect to see perhaps further losses in the sterling. Nearby support is about here. Okay, 133.35 to 133.75. So if the prices continue to drop into this area, I want to see the reaction. There's a possibility buyer may return. Okay, and if it does not and break below 131.40, that means it's all over. Okay. Okay, let's take a look at dollar yen. The dollar yen is under a lot of pressure. Okay, this is the dollar yen. As much as the US Treasury wants the Bank of Japan to actually hike interest rates, I think the Japanese are also very leery because, of course, if the yen becomes stronger, it will definitely make the import of food and energy that much more affordable. Okay, but it will also make them make their exports very uncompetitive. definitely not competitive in the States because of the 25% tariff. And now if the yen get too strong, they cannot compete with the other automakers like those from Korea or even those from elsewhere, from Europe, for example. Okay, so a three-way pullback may result in extended losses to 136 half to perhaps as low as 131. However, if the market do break below 137.24 in a daily time frame, I think we can honestly say that the run up in the dollar is possibly, at least for now, over. Okay. The Japanese cannot afford the yen to be too weak. They cannot afford the yen to be too strong. So right now they are caught in between, right? So this is my view. Let's take a look at dollar Swiss. Now, dollar Swiss, I have been talking about Swiss franc being too strong. Okay, the Swiss National Bank definitely do not want their Swiss franc to be too strong, not necessarily against the dollar, but against the euro. So the correct currency pair to watch for the Swiss franc is actually the euro versus the Swiss franc. Okay, so right now we can see that the dollar versus the Swiss franc hit a low of 0.7870 and then consolidate. There is no reason for the market to go higher, okay? Because at the end of the day, uh, investors are parking their money in Swiss franc. So that will put a floor under the Swiss franc, resulting in very limited upside for the dollar versus the Swiss franc. Okay, so maybe the dollar Swiss is not a good place to be placing your trades. Okay, I think I'll be looking more towards the European currencies. Okay, for clue of a top and for the larger degree downtrend in currency pairs against the dollar to go down. Here, I want to take a look at the Aussie. The Aussie has been struggling higher, but it has no momentum. Okay, it has been struggling. So we can see that the bounce here has been very aggressive. But since then, the market has been struggling to go higher. Yes, it's managed to edge higher, okay, on Friday, but again, there is hardly any momentum. Top side for this move is possibly for a challenge of this high here. Right? So this will be the immediate swing high to challenge. Not a lot of meat here. So I won't be looking at Aussie in any big way. What about the Kiwi? I think Kiwi is very much quite similar to the Aussie. Okay, we have a very sharp rebound from 55 cents, and now the high here is 61 cents, and the market is struggling. Definitely, when we look into the Kiwi itself over the long term, it is bullish. Okay, here in the monthly time frame, you can see that 48 cents is actually a very important low. Okay, most recent low here has been just under 55 cents. So we have one low here and one low here, market bounce. So definitely when you look at the higher time frame for the Kiwi, it is definitely more beneficial to be buying the Kiwi relative to selling. Okay, so it's going to be a long time before we can actually say the Kiwi is going to be super strong. Okay, but at least for now, we know that there's demand just under 55 cents to the dollar. Let me see. Any other currencies you want to see before we move on to the next, which is gold? I want to talk about gold. Okay, nothing here. I want to talk about gold. Now, gold is possibly at a point whereby I think an important breakout is about to show up. Okay, so this is the daily time frame. Okay, so right now we have the possibility of an ABC move to trade lower towards a $3,000 per ounce. That remains a possibility. Now, the other possibility is this move here that looks like a triangle. Okay, that can be better seen in the lower time frame. Okay, this is a 4 hours time frame. If this is a triangle, then something very interesting is about to play out. Okay, so if this is a triangle here, I will call this as A, and I'll call this as B. Now, all triangle has a 5-wave pattern within. And if this is C, prices are now going higher. And it has already broke this high here. The high that we saw on Friday was 3,359.11. Okay. Oh, not higher yet. Hang on. Oh, yes, taken out. Okay. 3,368.65. Definitely higher than this one. Okay. So there is a possibility market may do this. An internal three wave targeting 3,004 to 3,430. Okay, so this is going to be a very interesting. If this is going to be a B, C, this could be a D. Assuming the market actually go up here and cap below 3,430, then that will result in one more leg down. Now, is the one more leg down is that is going to be very interesting because, like I said earlier on, the triangle has 5 legs within it. And if that's the case, I want to see a move lower, but not higher, not lower than this low here. So if I'm going to be looking for a level to buy. Okay. I have already bought some gold, but I want to buy more because this move, if I'm right, and it turned out to be a triangle, now an A, B, C, D, E will result in an explosive move to the upside. Okay. And if that's the case, then there's a possibility that this entire move here from 3,005 to 3,120 will be extrapolated from the breakout point. So this move here is going to be so explosive that if you're not positioned here, you position here, you're going to get very lousy price. Okay. So if that's the case, I'm going to do a trade if and when this turn out to be like this. Right now, I'm hoping that this rally here will extend higher in the $3,400. And then if there is evidence that it's struggling and come off, then that is where I've been waiting to see where it comes out. And the pattern it comes out, ideally, it will be a B, C move. Ideally, okay? Then I know for sure where to position this buy, okay? And then there will be one explosive move beyond here. So right now, we can see that I'm going to do the calculator here. I want to see how much. I think it's worth about $380 if I'm not wrong. The high here is 3,005 minus low is 3,121. Yeah, $380 potential here. So if I manage to buy here and the markets move on the point of breakout, okay, from where market breaks out, there's potential of $380 in. Massive, okay? So definitely I'll be excited to continue to eyeball this pattern here. Like I said, based on the higher time frame, the daily time frame, there is still a possibility of an ABC move towards 3,000. Okay, and the lower time frame, there is a possibility of a triangle. So there are two possible technical outcome here. Both are equally valid. But I'll be very excited if the market goes up here, struggle, and then come back down. Okay, so this will be one trade I will definitely be eyeballing. Now the other move this past week has been silver. Silver has awakened. Silver has a very massive week. Okay, it has a very massive run up in prices. This is a 11 or 13-year high. I think it's 11-year high. $38.51. Okay, I remember back in those days I was buying silver below $19, but I got up too early. Too bad for me. Okay, so right now we can see that this is part of a larger degree 5-wave. 1, 2, 3, 4. And if this is the case, I think this is possibly going up to $40. Okay. So this could be the tail end of this sequence. Okay. So don't watch out. If there's going to be any buying, be careful that the nearby target is about $40 top side or thereabout. So look out for the lower time frame weakness. Right now, the market ended very, very strong. On the 4 hours, it is very, very strong. So until the market exhausts itself, then we will see what happens. Okay, so definitely I won't be buying silver right now. Okay, if I'm going to be buying, for those who are interested in buying, make sure you put a very tight stop. Okay, and trade a lower time frame. Now the other commodities to watch will be oil. Oil has been long-term bullish for me, and we can see that the overall pattern is there's a massive run up in prices. Unfortunately, this sell-off here damaged the potentially very bullish outlook. Okay, now the market has come back down, is struggling. Although lately we can see the price has been going up again, but it's still very tentative. But overall, if the picture ever change, Okay, it will come in a lower time frame first. For the 4 hours, market needs to take out $76.66. That's very far away from where it is right now. Okay, so I need a very aggressive move to the upside, take out this high. Then any pullback thereafter, I'll be looking to buy. But right now, it just does not look very positive to me. It looks like it's struggling. So at the most I can see for this move here is perhaps a move to the 50% mark. If the market continue to struggle higher, I think logically I would think there will be some kind of resistance at the 50% mark, which is at $70. Okay. Right now where it is $67.56. Now there are a couple of questions here. Let me take these new questions. Anonymous looking at yen, sterling yen. I don't watch the crosses that much. I have not done any analysis. Dennis is guys, can we go into silver for long term? Silver long term. So this is how the market looks like. So right now we have the ABC move. Within this ABC, there's a 1, 2, 3, 4, 5. Okay, so we are at the near, possibly to the tail end of this sequence from $17.55. But it is part of an ABC move. So things will only change if the market take out $44.21. This is based on the monthly time frame. So right now, based on what I can see, until the $44.21 is taken out, I'm going to call this as a part of a rebound, unless the market accelerate. Okay, because right now where the market is, it is between the equality range of $36 and $40.34. And right now we are smack in between. Okay, so it's very dangerous for me to go in and say I want to buy, because there is a three-way pattern here. Okay, so I definitely will be monitoring this. And if gold is going to be very bullish to the upside, perhaps an impulsive move higher is also a possibility. But until I see it, I won't believe it. Okay, I see that this proof here has been spilling over into silver market. Now, for those who are monitoring the COMEX silver, just know that in May there was a record number of delivery. Now, COMEX is a exchange that has a lot of speculation. Very few delivery takes place in COMEX, but something changed last month in May. Okay, May we have record number of delivery. And it means possibly the bullion bank that has been suppressing the price of bullion, okay, in particularly silver, they have been selling to suppress the price of silver, now are caught on the wrong side. And why is there such a heavy delivery in COMEX? To be attributed to a lot of people holding on to their trade until expiration day and demand delivery. Okay, that means they will have to buy a lot of silver. I think based on the expiration of the May contract, the amount of deliverable silver futures contract, it's way in excess of available supply. So there is going to be the background story that may actually build up to be a very aggressive move in silver prices in the months ahead, because a lot of people are caught on the wrong side, trying to manipulate the price of silver. But the demand from silver has been so strong. Okay, now it has resulted in more people wanting delivery from COMEX, which is a very, very rare occurrence. So when you are trading precious metal, just understand that delivery in COMEX is picking up, okay, like never before. So that could be the underlying demand for precious metal market. Not only among the sovereign fund, but from institutions and retail. Okay, just to give you some background. Okay, so until price breakout $44.21, I still see this as a three-way rebound. Okay, and that will only change if I get a surge beyond this price, $44.21. Then we'll take another look. All right, we have finished oil. Let's take a look at Bitcoin. Now you can see Bitcoin on the weekly time frame. You can see there's a surge in prices. Okay, so not sure what to make out of this. Okay, there is no news. Okay, that caused this price to surge. Okay, I could see that the possible catalyst is the passage of the One Big Beautiful Bill, which resulted in tax reduction for the oligarch, for the ultra rich. So now they have excess liquidity. I think they are pumping it into digital assets. I think getting ahead of the Genius Act. Okay, so this could be one of the reasons, okay, for the surge in prices in digital asset this past week. When we look into the daily time frame, we also see this massive surge. As we are speaking, the market now is reclaimed back at 118,000. Okay, so there is the possibility of an extended rally, at 135,000. Very, very strong. No matter how you cut it, it looks very, very strong. Now, there is a counter trend currently, not over until 118,855 is taken up. So that we still could see lower prices, but I think it's going to be a very shallow pullback if there's going to be a pullback at all. Okay, so my interest is in Ripple. I have bought into Ripple for quite some time now, and $2 has been a good place to actually enter. I actually entered at $2. Okay, so now the price has managed to scrape just below $3. We want to see if this can extend higher, because now that Ripple Lab has won the case against the SEC, there is no reason why Ripple cannot reap. Okay, and now with all the focus on stablecoin, the Ripple Lab stablecoin called the RLUSD could be a big benefit, big beneficiary of this Genius Act if it ever get passed. I think it will get passed. Okay, if it ever get passed, it will be big news. Right now, the move in the Ripple is unfortunately three wave. Okay, from the low here at $1.61, it's three wave, and it's actually hit target and then struggle. So this could be the only downside. If this time result in three wave and then unravel, then just too bad. Okay, but by and large, you can see that this underlying trend is actually quite bullish. This is the daily time frame, and it will remain bullish until this level is taken out. So I am of the opinion if the price can surge beyond $3.30, the next target will be $4. Okay, ultimate target I'm looking at is $6. Okay, so $6 remains a remote possibility here. But if you hit $4, I think maybe what I'll do is I'll take some profit and then wait for a pullback and then go for the next leg higher at $6. So this could be my game plan going forward. I realize there's a new question here. Anonymous, why do I think eventual passing of Genius Act will be a sell-on event? I don't say sell-on event. I say the passage of the Genius Act is likely to actually be beneficial for digital assets. If I read your question correctly, are you assuming that I'm saying once the Genius Act is passed, it will result in pullback in digital asset prices? No, it's exactly the opposite. At least the knee-jerk reaction will be to the upside. What happened thereafter remains to be seen. However, I think once the Genius Act is passed, I think there will be a pent-up demand, okay, for everything digital. Okay, so definitely across the entire spectrum, whether it's meme coin or whether it's altcoin, I think all will benefit. We're also seeing that in Ethereum. You can see Ethereum prices are also quite stable. Okay, we have a bit of a rally this past week. Okay, as of Friday, we have a high of $3,039. The pullback has been very, very shallow. Now it looks like it's going to go higher again. So whenever you are in a major trend, one of the simplest methods is actually to draw support resistance. For example, let's say you are looking to buy and you have not bought. Every time you see this kind of pullback that's very, very shallow and struggling, just draw a resistance line. When you break, you just go in and buy, right? Buy the breakout. Okay, it's a very simple and it can only in a very aggressive phase of a marketplace, it is a very, very effective way to engage the markets. I don't normally buy the high or sell the low, but if the market is in a very aggressive phase, okay, then this could be one of the entry method I will employ. Even when you look at Solana, it's also looking higher. Solana bullish trend is to the upside. You can see this is the upside. You can see that the weekly is definitely coming down, okay, but the daily is definitely positive. So looking at this structure alone, okay, the potential for higher prices, even if it is a rebound of a large degree pullback, okay, will result in a in a target way above $188. $218 is a bare minimum target, okay, three wave. So there's still some meat in the Solana move, okay? It has not exploded yet. All right, guys, I think this is all I have for you. Now remember on the 17th, which is coming Thursday, I'll be doing a webinar for CGSI, which is the former CIMB. Okay. Follow my Facebook if you want to participate. They have given me the login details. I will post it on my Facebook. And if you're interested to attend, I'll be talking exclusively on US equity markets, index futures, as well as the US Treasury yield. Okay, so they want me to talk on these two product range. So if you are keen, do join us and just watch out for my posting on my Facebook over the next 1-2 days. All right, guys, thank you very, very much. Let me see if there's any last question that you may have. Looks like there's no new question. So if you are keen, join me on Thursday evening, and we'll take it from there. Okay, there's one last question. Okay, thank you very much, Bob. All right, bye-bye, take care.